Hello there, I'm Elaine Cromwell. I'm a partner at Thomson Cooper Accountants, and in this short presentation I'm going to explain to you some of the main changes relating to payroll year end 2021. So what we're going to cover are the changes to national minimum and living wage, changes to student loans, the new personal allowance. We'll briefly look at the tax bands and the NIC bands and the auto enrolment thresholds, and how your statutory payments, things like SSP and SMP, are going to change from the 6th of April. I'll give you a brief update on year-end stationery and the employment allowance, and how the coronavirus job retention scheme is going to change over the coming months. Lastly, we'll wind up with a little bit of information on a national insurance holiday for employers who employ veterans, and the key payroll dates for 2021-22. So let's dive right in with national minimum wage and national living wage and how those change from the 1st of April 2021. So you can see here in the table what we're currently paying under the national minimum wage and living wage, and how that will change from the 1st of April. And the key change here is that national living wage will apply to anyone aged 23 years and over as of the 1st of April. So my top tip is to look at your payroll data now and identify those people on your payroll where this change may apply, so that you're ready and prepared to make those wage rate changes in the first week of the new payroll. So let's now look at student loans. The big change here is the introduction of a new loan type, a Scottish Student Loan Plan 4, where the threshold for repayment will start at £25,000 per annum. The deduction rate is the same at 9%, and you can see there within the table the thresholds and deduction rates for the other student loan and postgraduate loan types. As a result of the introduction of the new Student Loan Plan Type 4, there is a new starter form that employers should use from the 5th of April for all new employees, and you can download that from the HMRC website. So now let's look at the personal allowance for 2021-22. And the current personal allowance is £12,500 per annum. People can earn up to that amount before they start paying income tax. And from 6th April, that will increase to a whopping £12,570 per annum. What this means is that the emergency tax code that you should use from 6th April will change from 1250L week 1 month 1 to 1257L week 1 month 1. And in your payroll software you should make sure that people who are currently on a 1250L or S1250L code, that their code is increased by 7 before you process week 1 or month 1. You should also make sure that you check your HMRC PAYE account for any other notices of tax code changes for staff, which will apply from the 6th of April. And another point on the student loan changes, you can expect there to be notifications of changes to plans as a result of the new Scottish plan, and those will also be available in your HMRC PAYE account. The Scottish pay-as-you-earn bands for 2021-2022 are stated there, and only very small changes to the thresholds at which the different tax rates apply. But my top tip for this is that these thresholds should be applied automatically with your payroll update software updates, but do check that the updates have gone through okay by checking your legislation settings in your payroll software. Similarly, on national insurance bands and rates, there has been very little change here, just a small amount of tinkering round about the thresholds, but you should make sure that those have been updated correctly within your software. And also make sure that any company directors that are on your payroll have the correct national insurance methods set up for a director. There are two methods that you can use, a cumulative method or a table method. But you do need to make sure you've got directors set up correctly within your payroll software so that the software calculates the correct amount of national insurance specifically for directors. Auto enrolment, again, There's just a comparison here between 2020-21 and 21-22, and you'll see that it's just the upper band that has changed with the change in the tax year. Contribution rates remain the same at 5% for employee and 3% for employer. That's on the qualifying earnings basis. And you may have different contribution levels depending on how your pension scheme has been set up. So do check with your provider that you have the correct contribution levels set up within your software. So let's look at how statutory payments are changing. Well, they're not changing significantly. Statutory sick pay is going up from £95.85 per week to £96.35 per week from the 4th of April. The payment date aligns with a Sunday, so these rates actually change from Sunday the 4th of April. Parental payments such as statutory maternity pay, parental leave, adoption pay are increasing by a whole 77p from £151.20 to £151.97. And remember, if you're a small employer, you can reclaim 103% of these statutory parental payments through your PYE account. If you are a larger employer, you'll be able to reclaim 92%. Now, normally employers can't reclaim any statutory sick pay paid to their employees. That was why employment allowance was introduced a few years ago. But there is an exception to this with COVID-SSP, COVID-19 SSP. There are rules and you can only claim for a maximum of 2 weeks per employee. So do check the government website for your eligibility criteria. It doesn't apply to larger employers, for example, but check that if you're entitled to make claim for statutory sick pay paid as a result of COVID. HMRC have withdrawn the facility that they would offer employers in the past to provide free of charge blank P60s that you could print from your software. So if you are in the habit of providing your staff with paper P60s, you're going to have to make some other arrangement. You can no longer phone HMRC and ask for them to send them to you. Most software now, though, will have a template set up for printing P60s, or you might want to consider moving to providing your P60s and your payslips to your staff via an online portal or through email, saving yourself the cost of stationery. Employment allowance, as I mentioned earlier, was introduced a few years ago to compensate smaller employers for the fact that they could no longer reclaim statutory sick pay paid to workers. The allowance increased from £3,000 to £4,000 last tax year and remains at £4,000 for the coming tax year. You can only apply it against your employer's national insurance, and your software should apply it for you if you have the settings correct. Again, there are eligibility criteria, including criteria around about government subsidies and state aid. So you do need to check that your organisation is eligible for employment allowance, and the link's there to check that, and make sure you have the correct settings in your software, and the software ought to reclaim it until you've used up your £4,000 allowance. £4,000 is the maximum, and if your employer national insurance is less than £4,000 in a year, the maximum will be the total of your employer's national insurance. Coronavirus Job Retention Scheme has been extended further, and from April 2021 now to September 2021. The requirements are that employers will continue to pay 80% of furloughed workers' wages, but the amount that can be reclaimed from the government by way of a grant will reduce from July. And in the table there you can see it's 70% reclaimable in July, with 60% falling to 60% for August and September. And the maximum amount reduces from £2,500 to £218,750 in July and £1,875 for August and September. One other change is that from the 1st of May, employers will be able to claim for employees who have joined payrolls up to the 2nd of March. You need to have made an FPS submission to HMRC notifying them of the employee start date prior to 2nd of March 2021. But that will bring more people again within the job retention scheme. So next we've got an interesting little change that was announced actually in last year's budget, which is a national insurance holiday for employers' national insurance for employers that hire former members of the UK Regular Armed Forces. So for the first year that a veteran is in your employment, you will not have to pay national insurance contributions as an employer for that person. The relief is available from April 2021 and you'll be able to claim it, as I say, for 12 months. The mechanism for claiming this relief isn't yet available, and HMRC say that there will be an online portal for employers to claim the relief, and more information will be provided to employers in due course about that. But it's just worth bearing in mind if you're planning on any recruitment. So lastly, here is a summary of the key payroll dates for 2021-22. You'll see there the main bank holidays where there'll be no bank processing for payments, and also the deadlines for submission of your final FPS and P11Ds, for example. So you might want to keep this as a handy guide to remind you of those key dates. So that wraps up this very brief payroll year-end update. Please do get in touch with us if we can help you with your payroll, compliance, P11Ds, job retention scheme, grant claims. The contact numbers are on screen there. Thank you very much for watching this short presentation.